Hi, welcome to this video date. It's the 14th of August. It's Tuesday at 7:45 p.m. GMT. Just going to be looking at a couple of trade setups today. We go to the charts. So they're going to be GBP, USD, GBP, CAD. Now, the pound has sold off pretty hard recently, but we think it could be getting ready for a really good move to the upside, several hundred pips or more. And I'll explain my logic of why in a moment. Now, in terms of, just for new viewers, in terms of the technical analysis we're going to keep it very simple. We're only going to focus on big levels that matter to key institutions. And to find them, we're going to be using our favourite tool in Forex trading, the COT Net Traders Positions. If you're unfamiliar with the tool, you can click on the link beneath this video and learn more about them. If you just want to watch the video through right now, just keep in mind what we want to do is always trade with smart money commercial hedgers when their positions diverge significantly away from speculators. Now, also, in terms of my view of the charts, it is my view as of right now. It can obviously change in line with the market conditions. If you want all our trading techniques and our daily technical analysis of 14 major Forex pairs, you can click on the link beneath this video, get live access to our member centre. Right, let's take a look at GBP USD first. I'm going to start with the COT Net Traders Positions.
Right, on the chart of the COT Net Traders Positions for the British Pound, then we're going to move to another chart and draw some levels of entry, stop and target. In this chart here, we're just looking at what the commercials, smart money hedgers are doing against large speculators. And in terms of a setup we've got here, okay, I'll just make a comparison to the one that occurred over here on the left. And what you can see is the commercials in red really step up their buying, okay, into the 128 level. Speculators drop short against them, and you get an 800 pip rally, okay? Now, in terms of what we've got over here, we've got a much bigger commercial long position than here. It really stepped up over the last few weeks. Speculators heavily short against them, and it's roughly into the same level. So what we're looking for is a rally from current levels, and I don't think it's going to be 800 pips or as big as that, but it could certainly be 200, 300 or 400 pips. Now, let's just go to another chart and I'll draw my levels of entry, stop and target. Okay, we're on the chart of GBP USD, just draw my levels in a moment, but I just want to go through the GBP sell-off and why I think the commercials are buying so aggressively. This is just my view, but I think this is what they're seeing. Most sell-off, you can see it here, is on Brexit, really. What the media are putting out is obviously there's going to be no deal with the EU, hard Brexit, and you're just getting the worst eventuality. But that's getting discounted, okay, or is discounted. And yeah, when the media talk about Brexit, they're always looking for the worst eventuality. But if you were to, look at serious analysts, economists who are familiar with Brexit and the EU and what is going on. I saw a poll recently, 80% of them said, there won't be a hard Brexit. It's in no one's interest, okay? And you can already see this as a softening of stance from the EU towards the UK. The hardline guy in charge of negotiations, Michael Barnier, there's pressure on him now to be a little bit more conciliatory. You could see it in Merkel's speech today. Okay, Germany wants a deal for sure because obviously, they export a lot to the UK, particularly cars. A no deal or a hard Brexit for them is extremely bad news. Everyone just thinks, a hard Brexit is bad news for the UK. The UK exports as much to Europe as Europe does to the UK, so it's in everyone's interest to do a deal. Any good news that comes in, I think, could rally the GBP. And, despite what people say, there's still plenty of time left to negotiate a deal. But in the short term, the key event is going to be inflation. The forecasts, and this is for tomorrow, the headline inflation number at 2.5%, core inflation at 1.9%. Okay, now that may come in above forecast. And the reason for that is, if you've got a weak currency, it stokes inflation. So you could well see a number better than forecast, in my view. And if that happens, A lot of people speculated when the Bank of England raised rates. I mean, Carney indicated he could cut them further down the line if he needed to. Got inflation rising. That's not really a good idea, let's say. A central bank wouldn't do it. It's going to take very little to turn the British pound around the upside, because a lot of speculators are short, and many are short from lower levels, and their stops could get run. So I don't see too much downside in the pound from here, but obviously you've got to get some confirmation of strength to get in. Now, obviously get the sell-off, red candles all the way down. Got a red one here, still sitting at almost a daily chart low, or the chart that I've got up here. Now, obviously, inflation will be the moving event tomorrow. So if we do have a reaction to the upside, where would you buy? My own view is you could buy through there. So it's 128.35 for us, okay? So just getting clear of the round number. If you're really aggressive, you could come through those three bodies there, okay? Now, where could we go to? If you draw a trajectory line, diagonal, you can see just around where the 20-day moving average is, say, the 130 level, okay? But I actually think should overrun that level. I think all the, sorry, I'm trying to get my level straight. I think there's easily on the cards, okay, where the Brexit hysteria started. My own view is probably overrun that level. You have to see it goes up to 132. If I draw trajectory as well down here, you need to come through this double trend line here. Sorry, I can't draw it straight. I'm trying to get through the levels. There we go. And just see how she goes. If she goes through the level, she should gravitate up towards this 2130 level. Possibility of going to 131, 132. Where would you place your stop? My own view is coming in, I'd put it straight below the low. Give it about 30 or 40 pips below that low. If she starts to run, you jack your stop straight up. And for us, sure, she could sell off. She might not go up, okay? But she goes down more, we'll just bring our entry level down, okay? Now, in terms of GBP USD, obviously a portion of that sell-off has just been a generally strong dollar. The only thing that would negate this trade for us is if you get a big move to risk off, okay? Other than that coming, we're bullish of the pound for a really good short covering rally. Now, what I want to do next is look at GBP CAD, which I also think is a really attractive risk to reward setup. So let's go to that chart. Right, we're on GBP CAD, and we've looked at obviously the British pound fundamentals, and we think the bearish fundamentals have peaked. In terms of the CAD, we think the bullish fundamentals have peaked. Now, September rate hike in Canada is largely discounted by the bond market, so if that occurs, there shouldn't be too much reaction to it in the price, okay? But we do have inflation data out of Canada on Friday. Now, the headline inflation number is forecast to be the 6-year high at 2.6% year on year. That's due to food and energy costs, which are obviously volatile. If we go ex-food and energy, inflation is forecast at 1.8%, where it's been for the last 6 months. That is not enough to prompt a rate hike from the Bank of Canada. And they've indicated this, and also with recent data that's come out, it doesn't show an economy overheating. They don't need to raise rates anymore. Now, could the forecast disappoint? It might, but even if it comes in at forecast, then they make much difference to the CAD. Also, in terms of the CAD, you've got NAFTA uncertainty and any risk-off benefits to GBP. Okay, GBP will rise on the CAD if we get risk off. Okay, now in terms of the chart, it's a similar one to the GBP USD. Pounds will go sideways, quite gentle, and you get an accelerated fall to the downside. And actually, we're trading at a new daily chart low here. Okay, now in terms of where do I think the pound could rally to, where would we enter? If we draw a trajectory line, draw one there, she should gravitate up towards the 170 level. Okay, but I'm taking a similar view to the view that we've got in the British pound against the USD, that probably overrun it and go up to, sorry, I'll get my line straight, trying to get on 172. So I think we should go up to 172, where again, the Brexit doom and gloom accelerated prices to the downside. I actually think we'll overrun up to these candles here, which is about 174.40, I think. So if I just get them in, it's those bodies there. Okay. Now, obviously, we're at a new chart low, or daily chart low. So where would you buy? Well, obviously, you're getting strong selling into the close. I think, from our perspective, the main position that we put in would be through this level. So we want to come through 168.30. Yeah, it's a round number. You've got some resistance around there. Okay, so through the round number, we would look to buy. How far would we risk? We wouldn't risk this low, probably behind this tail. You can check this pair out in the guess pair section. So if we come through that double trend line resistance, we'll go long for a really good, hopefully short covering rally. If ever we keep falling, if we go through this round number at 166, I'd immediately come back in through that tail. Now, in terms of that would be a very aggressive entry. So if she goes through one round number and comes back through the other, that's normally a good aggressive buy for us. Then we can add some more in above the 168 level. Stop really, in our view, should probably be about 165.30. That's if we jump back through the level. Obviously, if we come up through this double trend line, our stop we just tuck back behind this round number, probably 165.70. So what we expect is the pound to aggressively rally. If it goes lower, it doesn't matter, we'll just keep trailing our entry down. You will get a snapback in this pair. The pound selling is very overdone. People are way too bullish about Canada. There's a lot of speculators short this pair as well. I haven't mentioned the COT net traders positions, but the commercials were actually pretty short on this fall, but they covered all their short position. Now the last data we have is from last Tuesday, and with the fall we've seen since Tuesday, I would say the commercials will now be net long and the speculators will across them net short. I don't know that for sure. I'll see it on the data when it comes out on Friday. But for me, pound due a rally, and it's going to be a sizable one on the CAD. I actually prefer this pair to GBP USD, just in case we get big risk off in the markets, because big risk off favours the pound over the CAD. We'll see how these pairs go. But that is the video for today. Thank you very much for watching me. As per usual, take care and have a good day.